In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Facebook divided. A new report of tension between Zuckerberg and Sandberg. How are the troops responding? Plus, almost a year ago, Bitcoin hit the $20,000 mark. Now it's down to $5,000. Have the cryptocurrency's best days come and gone? And while the global smartphone market slows, Xiaomi is relying on its presence in emerging markets, and because of that, revenue jumped better than expected, 49%. We will discuss Xiaomi's earnings later this hour. But first, to our top story, we saw the biggest stocks in tech resume their descent Monday. Investors continue to fret that the one-time market darlings suddenly face a darker outlook for growth. The so-called FANG stocks were among the biggest decliners of the day. Let's head now to our cross-asset reporter, Sarah Ponczak in New York for the full picture. So, Sarah, let's start with Apple. Is Apple leading these declines, given these new reports about production cuts?
Apple absolutely is leading the declines, and we have seen this multiple times over the past couple weeks, it seems. But yes, today, further reports saying that Apple has cut production over the past couple of weeks. Yes, we may have hinted that from some of its suppliers, especially Lumentum, last week, but it is by no means just staying within Apple. We are seeing it across the board. You look at tech hardware companies at large, the industry. You look at software companies at large as an industry. You look at the FANG names, all seeing very heavy declines today. At one point today, throughout the trading day, we saw multiple times every single one of the 67 members in the S&P 500 Information Technology Index were in the red. So it's starting with Apple, but clearly spiraling from there and affecting other names across technology.
I do have this chart here showing some of the FANG stocks in addition to NVIDIA tumbling. Walk us through some of the other concerns here.
Right. So, of course, you have the idea of slowing smartphone demand, but we are also still dealing with everything that comes with the trade war between the U.S. and China, and that actually worsened a bit over the weekend. So, Vice President Mike Pence did come out at the APEC conference, and said that the U.S. is not rushing through this. They want concessions from China, and they are not going to stop until they get them. So, of course, as we have been hearing, as this story has been developing throughout the year, technology is an area of the market, especially semiconductors, that are very, very heavily related to this. At the same time, we're still dealing with rising interest rates. A lot of people have been talking about rising interest rates as a reason that people might not want to be positioned in higher growth companies. And there are many other reasons out there as well that people keep referring to. At the same time, we do know that a lot of hedge funds were getting out of these names when we got their 13F filings. And a lot of people also just talk about the fact that this is a momentum trade. So if they lead on the way up, they're also going to lead on the way down.
So, let's talk a little bit about the volatility and how it ties into the political uncertainty and the potential trade war. I mean, we keep hearing investors say buy the dip, but where are the buyers?
It doesn't seem like they are here right now, but that is what's so interesting. Everyone kept saying that after the midterm elections, we would probably see a bit of a respite. We would see a rally, a relief rally. Yes, we got it for a day, and then it seems like the declines just kept on coming. And people also keep calling for this Santa Claus rally because seasonally, the fourth quarter is typically a very strong one. And you would assume that if we're going to see a Santa Claus rally, maybe tech stocks would lead on the way up as they have in years prior in this entire bull market. But it seems very clear that a lot of people are concerned about this. Yes, many people keep talking about the fact that although we've seen declines, that's also made tech companies' valuations look more appealing. However, it looks like we're going to have to go down a bit further before people really want to step in and buy the dip on this.
And Apple is one of those companies that typically has a huge holiday quarter, but of course, we don't know if they are indeed cutting production on all three of their latest iPhones. Sarah Ponczak for us in New York. Thanks so much, Sarah, for breaking it all down. Now, to another major story we have been following, the continued fallout over Facebook's management crisis. Reports from the New York Times and the Wall Street Journal continue to emerge about a Facebook divided after allegations of their handling of the crises, including Russian election meddling and more. Those reports detail a Mark Zuckerberg who is allegedly both defiant and needing to be decisive. Here now to discuss, we've got Bloomberg's Shira Ovide, who's been following the turmoil. So, Shira, in the latest Wall Street Journal report, reporters talk about how Zuckerberg declared it's wartime. It has rubbed other executives the wrong way. Some of those executives have left. When there are real wars going on around the world, what do you think of this tact?
I can understand why Mark Zuckerberg would want to assert more authority over his company, particularly at a point when, look, there's a relentless drumbeat of questions about whether Facebook has made the right decisions, and ultimately Facebook is Mark Zuckerberg, period. And so if I were him, I probably would also want to assert more control over a company that is ultimately his and his alone. But the question is, there have been a lot of those questions about Facebook's leadership and the decision making are about Zuckerberg and whether he's the right person to lead Facebook, which is a question that I can't imagine being asked of Facebook even a year ago. And so I can understand why he's asserting more control, but you can see, right, that is causing friction, and it doesn't end the questions about whether he's doing the right thing.
On the one hand, there are these reports about, Zuckerberg leading these raucous all-hands meeting, saying that these reports are completely untrue, and employees responding to that. Meantime, our colleague Sarah Fryer has reported on morale at Facebook being low. There certainly seems to be a sense that employees at Facebook feel that they're being unfairly targeted by the media. Do you sympathize with that?
I do sympathize, and there are these two threads, right, of what's happening inside of Facebook. On the one hand, you have this defensiveness that Facebook and many of its employees feel that they've been unfairly tarnished by a lot of the media coverage and attention from Washington and regulators around the world. And I do sympathize with that point of view. It's possible that some of the relentless attention has gotten carried away, but the crises are real, and Facebook's failure to make good decisions and to deflect hard choices over the course of many years, those are having recriminations now, and it does feel inescapable. And on the other hand, you have this morale issue that, look, it may be caused by the stock price decline, that we've seen the stock decline 35% or so from a peak earlier this year. A lot of that is because of business questions about Facebook, in addition to this kind of regulatory, social, political questions. And again, if you're a Facebook employee and you get paid in equity, I can also understand why your morale would be low looking at the stock price chart there.
Meantime, over the last year, the founders of Instagram, WhatsApp, Oculus have all left the company. The Wall Street Journal report talks about how Sheryl Sandberg was concerned about, tension between the two of them. Now that we're starting to see more context behind some of these departures and connecting this to a perhaps more aggressive Zuckerberg, how concerning is that?
I think it's very concerning, in part because some of the tensions between the Instagram founders and the Facebook leadership team, for example, are born of a little bit of desperation. And the same is true, the tensions between the WhatsApp founders and the Mark Zuckerberg and Sheryl Sandberg on the Facebook side. The Facebook leadership team wants to make money from those assets much more quickly, and they need to, because you've seen revenue growth slow at Facebook's core newsfeed business. And so it is almost inevitable that you get this tension between founders who want to preserve the identity of the products that they founded and built, on the one hand, and on the other hand, Mark Zuckerberg and Sheryl Sandberg that realize more and more they need to make money sooner than they thought from these younger assets that Facebook has acquired.
Now, Shira, you've actually taken a closer look at where Facebook is actually spending money to fight some of these concerns, and the company has continued to fall back on, look at all of the money we're investing in AI and, new staff to combat security issues. How much is Facebook actually investing in this sort of do good or do gooder mission, and how much of it is so that Facebook continues to only grow bigger?
Yeah, and I think that's a fair question. You see people like Mark Zuckerberg reiterate often this year that they're spending so much on safety and security, these kind of noble do-good costs, that the profitability of the company is going to be seriously hurt. So it is true that Facebook says it's spending billions of dollars to protect itself from foreign election interference and hate speech and things like that, but it's also spending lots of money on everything else. The cost of being Facebook is going up. So you saw the employee base, for example, grow 45% in the last year. It's spending more money on computer data centers, on these web video projects, revenue sharing with web video creators, on VR. So the fact is that all the costs are going up at the same time that the revenue growth is going down. And so what you have here is profitability that's being squeezed. And it's not just because Facebook is trying to repair the damage that it's done.
All right, Shira Ovide continuing to cover this story for us. Thanks so much, Shira, for weighing in. We're going to continue talking about Facebook later in the show with one investor who's been fighting for a power structure change. Our conversation with Julie Goodridge of North Star Asset Management coming up. Also up, it's been almost a year since Bitcoin's sky-high $20,000 valuation. Now it's piercing the $5,000 mark for the first time since October 2017. What is behind this plunge? We'll discuss next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Cryptocurrencies resume their slump Monday, Bitcoin falling below the $5,000 mark for the first time since October 2017. This in the wake of increased regulatory scrutiny of initial coin offerings and the split of one of the largest tokens. Volatility has returned to cryptocurrencies, with the largest tokens shedding billions in market value since the hard split of Bitcoin Cash last week. Here to talk about it more, Spencer Bogart, Blockchain Capital partner. Blockchain Capital is a venture capital firm investing in blockchain-enabled technology companies. Also with us, our Bloomberg editor and co-host of Wedge of Myth, Joe Weisenthal. So, Joe, we talked about the overall tech slump earlier. How much of this has to do with tech in general falling, and how much of this has to do with Bitcoin?
That is a really tough call, and I think about that question about the relationship between cryptocurrencies and traditional capital markets a lot, and I've never settled on a complete answer, except I'll say this, which is that if people thought that crypto or Bitcoin specifically or tokens were going to be some uncorrelated asset class that people will jump to in the event of a sell-off, obviously that hasn't proven the case. Now, we haven't really seen a panic, so to speak, in traditional markets, but it certainly hasn't been the diversifier that people would have hoped.
I do have a chart here in my GTV library. If you think Bitcoin is a bubble, just compare it to Bitcoin. Spencer, how would you weigh in on that question that I just asked Joe?
Sure. I mean, look, Bitcoin's down 75% this year and up 400% over the past 2 years. So I think time horizon matters a lot here. As to whether or not it's correlated with broader tech, I think the answer is probably not. And I agree with Joe. The idea that this is going to be an uncorrelated asset forever is not going to hold. It will become more correlated to particular things as it becomes more institutionalized over time.
That said, Joe, if the tech volatility doesn't let up, what other indicators can we look at?
Yeah, it's really hard to say and hard to figure out what's going on with the broader tech volatility. But there might be something to the idea that what we saw in 2017 and the first half of 2018 with tech in general, it was a function of extraordinarily loose financial conditions, optimism, and of course with all this stuff, and whether it's crypto specifically or even some traditional tech stocks, what you see is a matter of, in one light the story is fantastic and then the facts don't change, but suddenly a new light shines on the same thing and suddenly the same thing looks kind of ugly. And so, thinking about some of the tokens, think about the narrative that we saw last year with this new way of doing capital formation, this new way of organizing people that could beat regulations. And now we're sort of realizing that a lot of the old rules apply, that it's not so easy to circumvent the old rules, so to speak. So there are some similarities with the underlying facts staying the same, but suddenly a new narrative emerging.
Spencer wants to jump in here, I can tell. We're also seeing not just, a decline, but the fastest decline for Bitcoin ever, Spencer. how can you continue to back this whole industry given the negativity around it?
Yeah, sure. Look, I mean, I still believe that programmable money is a multi-trillion-dollar idea. So, I mean, look, right now, we're in a bear market. We're coming off one of the biggest bull markets in all time, of all history. So, bear markets do bear things, right? So we've had a ton of positive news over the past 6 months, and markets have continued to trickle down. We saw the opposite last year, but the opportunity is still gigantic.
So, what are you watching?
Yeah.
To detect whether there really is going to be a change, or if we're continuing, we haven't hit bottom yet.
Yeah. Yeah, 100%. One thing I'd be careful of is conflating kind of all the tokens and ICOs that we've seen with Bitcoin itself. I think that from the outside, it's easy to see those as one and the same, but from within the industry, they're very different. And I'd say that, again, Bitcoin is really attacking this idea of programmable money, which is something that I think right now some people use because they have to, and I think over time more people will use because they want to, because it can do things that they can't do otherwise.
Joe, is that fair? I mean, obviously within the industry, there are very, specific stories, but it's hard not to look at the asset class as a whole.
Well, so I think Spencer makes a really good point that the story that the sort of Bitcoin argument that the Bitcoin bulls make is really different than a lot of the tokens. There's a difference between money versus people holding some sort of token with a potential utility to use in some sort of distributed organization. That being said, what I find really striking about the market right now is there doesn't seem to be any discrimination on the part of traders between good projects and bad products, or good projects and bad projects, money versus token versus equity. Like, everything sort of falls and rises on the same day. So if you look at a day like today, everything's down double-digit percentage or more. You go back to days where everything's up. So while it's certainly true that within the broader crypto landscape, there's a lots of different ideas, and we'll see which ones thrive and we'll see which ones don't. And probably the programmable money narrative is the strongest and furthest ahead. But it's hard to see in the market yet any sort of traders or investors expressing a real view towards one versus the other. Usually they all sort of rise and fall together.
So, Spencer, where are you putting your money? What are the parts of this industry that are going to thrive? And where do you think that there is overhype?
So again, I go back to, again, Bitcoin. I know that for a lot of people now, they've been hearing about Bitcoin for so many years, they want to find what is that next Bitcoin. And since the beginning of the time of Bitcoin, people have been looking for that next Bitcoin. I think that's a dangerous game to play. So again, money is a network effect type of ecosystem. Bitcoin does have the largest established network effect. It is more than 5 times larger than the number 2 crypto. And it is excelling at the programmable value use case. So we do continue to look for companies that are building on top of that and making this programmable, natively digital value more functional.
All right, well, we're going to continue to follow Spencer Bogart, Blockchain Capital. What'd you miss? Co-host Joe Weisenthal, as always, thank you both.
Thank you
for weighing in. Coming up, Apple introduced a slew of new iPhones just 2 months ago. Now the company is slashing production orders for all of them. Will the holiday season be enough to get the smartphone maker back on track? This is Bloomberg. Apple is dragging down the larger market once again Monday following reports it cut orders for all 3 of its latest iPhones. The Wall Street Journal reported the company slashed production orders for the iPhone XR, XS, and XS Max due to lower than expected demand. Sources speculate that the higher prices may be driving customers towards older models. Meantime, Apple's approach to privacy is also being called into question. In an interview with Axios on HBO, CEO Tim Cook defended taking billions of dollars from Google to make it Apple's default search engine, calling Google's search engine the best. Here to discuss, our Bloomberg tech editor, Alistair Barr. Ali, I want to start with the production issues. We always hear these drips and drabs, but now we hear that all 3 iPhones, orders of all of them, are being cut. How alarming is this?
It's very alarming. This happened a year ago when the first iPhone X came out, and actually the results turned out to be pretty good when they reported in April. The difference now is that when Apple recently reported, they said they were going to stop reporting unit sales, and that's really made investors a lot more concerned. So you have these supply chain reports all the time. Apple sometimes cuts cuts orders for specific reasons. It doesn't want to use that supplier, it wants to use this supplier. But this time, there seems to be a lot more suppliers, and with this idea that they're not reporting unit sales, investors are much more nervous this time around.
Right. Now, these reports are all investors and analysts are going to have to rely on to make their judgment calls. You know, we had Gene Munster on last week who said he thinks investors are missing the story. It's really not that big of a deal. They're still going to sell a lot of phones, and they're making, you know, they're successfully making a transition to becoming more of a services company. What do you make of that argument?
I think the point on the more expensive phones versus the cheaper phones that you were talking about in the intro is kind of important. Apple has actually gone out of its way to make a very wide range of iPhones available. You can buy a new one for under $500, something like that, which is relatively cheap in the US. And so I think they are making a conscious effort to say you can buy our super fancy one for $1,000, or you can buy one for half that. Apple really has never done that with an iPhone until probably this year. And so I do believe that actually they really do want to get to a point where they just have the most amount of devices out there. It doesn't matter whether it's the newest one, and then they try and sell services. The key question, though, is whether these services are going to be any better than all the other ones out there. Like, is the video one going to be better than Netflix? That's still a big question mark, and next year is going to be a huge test for that.
Well, all eyes are going to be on that revenue number at the end of the holiday quarter. Now, I want to talk to you about this interview that Tim Cook did with Axios, where he defended, you know, Tim Cook has been out there criticizing companies like Google and Facebook for the way that they handle user data and profit off of it. Now he's defending the fact that Google is the default search engine on the iPhone. He said, I think their Google search engine is the best. Look at what we've done with the controls we've built in. We have private web browsing. We have intelligent tracker prevention. What we've tried to do is come up with ways to help our users through the course of their day. It's not a perfect thing. I'd be the first person to say that, but it goes a long way to helping. You know, so here now, he has made a point to criticize others. What do you think of his argument as to why they continue to make Google the default search engine?
It goes to a really good point about Google search, which is still, we've been talking a lot about data privacy and things like that, and the deal that we all make is there's a really good service and we give up our data in return for that, and Facebook is a great example of where that's being tested, and maybe some people are saying I don't have to use Facebook, but Google search is a lot different, right? You're out and about, you need to know something, you got your iPhone, you type it in and you get a good result. Really, Tim Cook can't sell an iPhone without a good search engine on it. Maybe he could do Bing and that would be okay. Siri is not good enough, and they've tried some search stuff themselves, and it's just such a huge job that basically they've given up and done this deal. And if you're going to put Google on your phone, you may as well take billions of dollars from them for it.
All right, our tech editor, Alistair Barr, I'm sure will continue to cover this one. Thank you so much. Alistair, coming up next, will those who hold the power at Facebook ever change? Our next shareholder says it has to. We will discuss next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Back to our continued coverage of Facebook in crisis. While the critics are out in full force following recent reports of high-level mismanagement at the social network, the board still has CEO Mark Zuckerberg and COO Sheryl Sandberg's backs. In a public statement last week, the board said to suggest that they knew about Russian interference and either tried to ignore it or prevent investigations into what had happened is grossly unfair. In the last 18 months, Facebook, with the full support of its board, has invested heavily in more people and better technology to prevent misuse of its services, including during elections. We should note Zuckerberg and Sandberg are members of that very same board that is standing behind them. My next guest has long been sounding the alarm for a change in the power structure at Facebook. Julie Goodridge is the CEO of North Star Asset Management, which currently holds over 37,000 shares of the company. For years now, Julie, you've been clamoring for a change in the share structure, given the power that Zuckerberg himself holds. What do you think now?
Well, I think they should have changed the share structure in 2015 when we first filed a shareholder resolution. This is the problem with corporate governance when you've got an insider board, and really Mark Zuckerberg has the power to fire any one of his board members at any time. So what that does, as you probably understand, is it takes away, sort of the sense of autonomy that other board members have if they're at all concerned about maintaining their relationship with the company. I think it's problematic.
Do you sense, Julie, an opportunity now to re-agitate for this, and do you have any plans to do so?
Well, I mean, we've got this same shareholder resolution filed. So just so folks know, I mean, and probably everyone listening to this does, but Mark Zuckerberg has primarily Class B shares, which give him 10 times the voting power. And so what that means is that he controls 51% of the vote, but he only owns 30% of the stock. So that's a problem for other shareholders. So, for example, in the shareholder resolution that we filed last year, asking for there to be one vote per share, so to only have one class structure, Class A. What ended up happening was we only got overall 21% of the vote. But if you looked at all the other shareholders who voted in favor of our resolution that were not insiders, we actually received 81% of the Class A share vote, which is really high.
So you've got other investors out there calling for an actual board shakeup, calling for Mark Zuckerberg, for example, to step down as chair. Take a listen to Jonas Krohn here from Trillium Asset Management.
It needs to be somebody that's really genuinely independent, somebody that has gravitas and can be able to speak with authority and with the confidence of the rest of the members of the board. I think it needs to be somebody that has a broad diversity of experience, clearly tech experience, but I think also there could be some real merit in having somebody from the traditional media, the newspaper industry that has a deep understanding of the role of media in society. Somebody with some time on their hands, because I think by all accounts, this is going to be a long few years ahead of the company.
Julie, Zuckerberg responded to that saying, this is not part of the plan as of now, but would you like to see him step aside as chair?
Actually, the person I would like to see step aside is Peter Thiel. And I would like to see the vote structure changed. I actually think it might not be great for him to completely step aside, although I would certainly vote in favor of that if that's, we would support, Trillium on that resolution. The issue for me is that when you take a founder like Zuckerberg and you have them step aside, it means something very scary for all of the shareholders, right? And I actually think that what he needs is better corporate governance. He needs to let go of his insider shares and go back to a one vote per share structure. Even when the Times tried to throw Sheryl Sandberg under the bus, these guys are responding to issues that occurred in the course of doing business over several years. What's scary about it is that they didn't anticipate that these kinds of things could happen. That's the scary thing, where you look at somebody like Peter Thiel, who in fact was very instrumental in supplying, Cambridge Analytica through the other company that he is the CEO of, with, ways to sort of access this information and to get into, sort of infiltrate the Facebook system. And he's the one that could have really said, hey guys, we want to be careful about our governance here. I think it points. Sorry, go ahead.
Hang on, before we, I want to dig a little deeper into your thought here on Peter Thiel, who is very controversial on the Facebook board for a number of reasons, not the least of which is his support for President Trump. Mark Zuckerberg has come out and said that he supports Thiel remaining on the board because he adds to a diverse set of views that they would like to see represented on the board. I believe you're talking about his association with Palantir, where he's a co-founder. He's not the CEO. But talk to me a little bit more about why you want to see Peter Thiel, of all of these board members, many of whom have presided on the board over these many years, to step down.
I think because when he came out with his, outrageous support, hugely public support, really, of Donald Trump, he shines, ends up holding himself high as, a representative of Facebook. Now, of course, it wasn't Facebook that came out with that, but basically what's happened over the last several years is Facebook, by virtue of the way it started to change the way it did business, and rather than just taking regular old advertising for people, people who were looking for pairs of shoes or computer equipment or something like that, they started really taking money for political ads. And, that is very similar to the way that Peter Thiel sort of came out publicly about his support of a political candidate. I really don't think, and this is of course all since Citizens United, but I really don't think it's appropriate, and in fact it's illegal for Facebook to have taken ads from a foreign power to support or in any way have a say on any sort of elections in the United States of America. It's not legal to do that. So I don't know if they need like a corporate governance guy on there who can really, or a government affairs person who really understands how securities laws work. If they need somebody to think about, okay, are they making so much money from running political ads that they need to keep running political ads for people and running commentary that's from paid sources around political matters. I don't really think that's how Facebook imagined itself, and I'm sure that that's not how all the what are now middle-aged people who are still looking on Facebook and still using it. I really don't think that that's why they go on Facebook. It's one thing to report the news; it's another thing to create the news.
Julie, I want to zero in on something that you said about Sheryl Sandberg. There's been a lot of reporting about how Sheryl Sandberg in particular, who is in charge of communications and policy as the COO, has handled this situation. Alex Stamos, the former head of security, wrote an op-ed in the Washington Post where he said, "Yep, Sheryl Sandberg yelled at me. I had no confidence that we'd found out everything the Russians were up to, and it was quite possible that things would get worse before we built teams and invented the technology necessary to stop it." Sheryl, as reported in this past week's New York Times investigation, felt blindsided by this. She later apologized. You think that Sheryl Sandberg is getting thrown under the bus here? Why?
I only feel like she's being thrown under the bus because I think that this stuff has been going on a lot longer and has been a bigger problem that is related to technology at the company and the way algorithms are used and the way they are used for other purposes. And that's why Mark Zuckerberg, obviously doesn't get sort of the impact that his company has on society. Okay, that is clear. He doesn't have those people skills, right? The human skills. But Peter Thiel completely understands, what exactly was going on. I mean, Palantir was hired by the federal government for several federal agencies to uncover, different kinds of problems in all of their record keeping, and he completely understands how to what can be used, how you can use this technology for evil, essentially. And he was the one on the board who should have said, hey, in 2013, 14, we really need to take a look at this.
Now, what about regulation? We're hearing increasingly from lawmakers that Facebook faces or risks additional regulation. What would you like to see the government do as opposed to the company?
Well, that's a tricky thing, right? Because this is a brave new world. This is a whole new area. And I don't even know that the government is equipped to understand what kind of regulations need to be put in place, right? So again, it's the people with the technological expertise that would actually be best equipped to be able to protect consumers and the people at large. So I'm not. I think that something needs to happen, but I don't. In this case, I don't really blame the government for not having appropriate regulation because all of this stuff is new and it's evolving every day. So the question is, who at these companies is going to put the brakes on, and when are they going to do it? And if they're going to be doing what these guys are doing, which is shoveling sand, trying to, or climbing out of a hole, what is it that what do they think they're they're going to be able to pull off, because now they're just dealing with one problem after another problem after another problem, when some foresight, some thinking about what it would mean to be in the political sphere, some thinking about what it would mean to take ads from candidates would have been a really smart place to start.
Julie Goodridge, North Star Asset Management CEO, not mincing words. Julie, thank you so much for stopping by.
Thank you.
Coming up, Airbnb is one of the most anticipated IPOs in 2019 or possibly 2020, but could a crackdown on illegal renting across the country stand in the way of its public debut? We'll discuss. This is Bloomberg. 2019 is expected to be a big year for IPOs, from Uber to possibly Airbnb. In a public memo Friday, the home-sharing startup announced more than $1 billion in third-quarter revenue, calling it its strongest quarter to date. Since 2008, the company has become one of the most valuable startups in the United States, with a current valuation of $31 billion and listings in 191 countries. Here to discuss, we have Airbnb's global head of public policy and public affairs, Chris Lehane. Chris, I want to start with you by talking about the fires, because I know that this has been disruptive to your business, and also you've been doing things to help. We can see the air quality behind me, still terrible here in the Bay Area, but it is nothing compared to what these families are going through north of us. You know, what has Airbnb been doing to help?
Yeah, I mean, obviously what we've seen in Northern California and Southern California, I mean, is just devastating. Obviously, we've seen some tremendous heroism from the first responders, from just everyday people. And we've been just honored by our hosts. We've had over 2,500 hosts open up their homes to over 1,800 people who've been displaced by the fires. That's not really Airbnb, that's our hosts. And we're grateful for that. I think they're appealing to the higher angels that are in all of us, and it's just awesome to see amidst all of this catastrophe. So thank you for asking. Obviously, we see the air here. We're feeling it here in San Francisco, but nothing like what people are going through on the ground.
Right. Our hearts go out to all of them. You know, I do want to talk about growth. Yep. You're going into the holiday season, typically a very big season for Airbnb, and you just reported a record quarter. You say you have record bookings over Thanksgiving weekend. How long can you sustain that kind of growth?
Well, as we released on Friday, significantly over $1 billion in revenue in Q3, our single biggest quarter ever. And we are blessed ultimately by this really significant and robust growth. But ultimately, that's tracking to the community model that exists on Airbnb. We only do well if our hosts do well, hosts only do well if guests do well, guests only do well if communities are benefiting. But that flywheel does create a network effect globally, and you can see that underneath these growth numbers: 91% growth in Beijing, right? Over 70% growth in places like Mexico City or even Edinburgh or Birmingham in England, just to pick out some from around the world. But ultimately, what's really underlying the foundation for all of that is that people are looking for this type of travel, right? More people are going to be looking to do home sharing type of travel, people-to-people travel tomorrow than today. Now, this is not new, right? Abraham Lincoln, Gandhi, they did home sharing. But in particular, this is what consumers are looking for, particularly those millennial consumers who are going to be 75+% of all consumers going forward. This is how they like to travel.
Give me an update on Beijing, because you did have a head of China that resigned there over a Me Too issue. I know that one of the founders, Nate Lecharczyk, went last year. But you mentioned 91% growth. You're starting from a fairly low bar because the business was small to begin with. But how do you expect that to expand?
Yeah, again, looking at our global numbers, what we're seeing in China really does reflect the same thing that we're seeing globally, which is we are blessed with this growth that is being driven by that network effect that exists locally. But what we're seeing in China is really interesting. It's the same sort of underlying dynamics and trends that we saw with the business earlier, which was when Airbnb was first launched, the majority of the users were millennials. If you look at our China market right now, about 85% of our consumers are millennials. Similar trend, keeping in mind that there are 400 million millennials in China, right? We are really, the significant player in what's called the outbound travel, people going from China abroad. But what's happening is they come back and then they begin to travel domestically, and Airbnb begins to grow as a result of that. And so the type of growth we've seen in Beijing is actually replicated. It's similar numbers depending where you are looking throughout the country. But look, China is a place you have to get up every day and you have to work incredibly hard. We do have a president of the business who's from China, based on the ground there. We have an incredible team made up of Chinese folks who are on the ground in Beijing and other offices around the country. Feel good about where we are, but know that we need to keep working at it.
You quietly removed some listings in the Jewish West Bank settlements, and this is something that pro-Palestinian groups have been pushing for a long time, but why now?
Yeah, look, this is, as I'm not the first one to say this, obviously, an incredibly complex part of the world, an incredibly difficult issue. This first came up early in 2016 when we were really first confronted with questions about 150 to 200 listings that exist in the West Bank, the occupied territory. And really, since then, we've spent a lot of time trying to understand the issues, talking with experts, stakeholders, and put in place a framework to help us really sort of reach a decision here. And that framework includes understanding that every situation is case by case, talking with those experts, our stakeholders, taking a look at the degree of human suffering and what's contributing to it, and really looking at trust and safety issues, and ultimately whether our product, our business, our listings are contributing to the core issues there. And using that framework, ultimately made the decision that we need to remove those listings. We say that knowing it's controversial, that we're not necessarily going to make anyone happy here. Look, I've traveled to Israel. It's an incredible part of the world with incredible people. And this is a really hard choice we struggled with. We're not a government. We're not necessarily the experts on this, but because we're in homes, we often get put into these situations and do ultimately believe, a time when a lot of people are talking about, our tech companies, our platforms going to take responsibility, that we wanted to act as opposed to necessarily react to situations. And we use that framework to help drive that decision.
You've been looking for a CFO since Lawrence Tosi left. Still haven't hired one. Why is it taking so long?
Are you interested?
Are
you coming for it? Yes.
It might be a conflict of interest.
Just a little. We've had, not surprisingly, given the historic nature of the company, some of the issues that we have talked about, that there is incredible interest in this particular role. We've had incredible folks that we've had conversations with. I will be sure to let you know when we have reached a decision on it. But we've talked about the fact that we want to be IPO ready by 2019. We haven't announced if and when we would take the next step beyond that. But ultimately, we are going to be looking for someone who really does appreciate that community model, right? That we are looking to be a 21st century company, that we get growth in the following way. Do we deliver for our hosts? Do our hosts then deliver for those guests? Those guests deliver to the community. What's really interesting about the Airbnb model, and I think why we've gotten so much interest and why I think this is going to be an interesting role, is that ultimately if we drive a social value proposition, that actually drives our growth. And that ultimately comes back to the early question that you asked, which is how do we continue this growth? We continue this growth by delivering on that community model.
Right. You ended forced arbitration, not just for sexual harassment, but for discrimination, which is very progressive. We haven't seen other companies do that yet. How do you plan to handle this between hosts and guests?
Yeah, it's a great question, right? Our model is a little bit different maybe than some of the other sharing company models. Our hosts are really, our partners. We do have a really aggressive policy called We Accept, which broadly deals with discrimination types of issues. And you have to agree to those set of standards before you can even come on the platform. But as it relates to our employees, which is what we announced last week, I do think that is also another example of how we're trying to build that community model. Okay, I come out of Democratic politics originally in the U.S. I did a lot of labor politics when I was working in Democratic politics. And for me, it's just personally, it's incredibly interesting and I actually think really exciting to see that companies understand the value of their employees and their community. Employees are pushing for companies to be responsible. I think it's awesome. I mean, I think it's great that you have these employees and these companies understand they only succeed if they're able to attract and recruit these great candidates. And it's a pretty cool thing to see that beginning to develop and hopefully a good indicator of where we're going as a society.
You mentioned your time at the White House, which is a perfect segue for me because every time you come on here, I have to mention that you were the master of disaster, known as the master of disaster. So how would you master Facebook's disaster right now? Like, what are they doing wrong?
Well, I will be very careful here
able to contain this?
Because I obviously don't work at Facebook and want to be really respectful. I would say, without talking about Facebook specifically, but as a general approach, I do think ultimately people have to be comfortable with what their mission is, and what their principles are, what their values are, and really do the best to try to proactively execute against those. We talked earlier about whether you're going to be proactive or reactive. And again, I'm not talking specifically about Facebook, just talking writ large in the context of how people should think about these things. At the end of the day, you have a North Star. Your North Star is your mission and your principles. Those only really are true and viable if you're actually executing against them. And that has to be when you have the hard decisions, right? It's really easy to say all those things when it's an easy decision. It's when you have a hard decision that you really get tested. And I remember, working in politics. Politicians were always tested, not on the easy stuff, but in the cauldron of a crisis, because that's where your character really gets exposed and you have to make some decisions. But I know some of the folks at Facebook at the top and throughout the company, I think really good people. And I think ultimately, they will be doing those. I think they have tried to do those, and at some level have done some productive stuff. But obviously, I don't know what's going on there, and I'm really not in a position to evaluate exactly what they're doing.
The cauldron of a crisis, though, that is a metaphor that I'm going to use. Airbnb's global head of public policy and public affairs, Chris Lehane. Chris, always great to have you here on the show.
Emily,
thank you
thanks.
so much.
Thank you very much. Have a great Thanksgiving with your family.
Thank you.
Yes.
Thank you. Coming up, China's second largest smartphone maker, Xiaomi, fighting a stock slump. Shares down about 20% since its July listing, but things could be looking up. It's out with pretty impressive earnings results. We'll break down the numbers next. This is Bloomberg. Third quarter revenue soared 49% at Xiaomi. The Chinese smartphone maker relied on its presence in emerging markets to offset sputtering demand for mobile devices. Shipments rose 21%, while the global smartphone market shrank 6%. And if you own a Fitbit or an Apple Watch, life insurers may want your business. John Hancock recently expanded an optimal program for healthy habits. Participants can gain points for tracking their daily workouts, and the points can be used for shopping or even saving money on premiums. Insurers see health-conscious customers as good risks. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. We'll see you back here tomorrow.